Hey, I'm Elwis Johnson with Johnson Wealth Advisors. It is Monday, May 18th, and it's time to put it in perspective. I apologize for missing the week before. Had to take care of the wife. She's had some surgery, and so I'm being nurse husband. And as everybody should know, family is what matters most. Okay, so let's jump into it. So this past week, the market gained just under 0.2%. When I say the market, I mean the S&P 500. The Nasdaq moved down about 0.06. But here's what matters is that year to date, we're up almost 8.5, a little over 8, okay, right in between. And that's real progress, okay? So the story this week wasn't the broad market. It wasn't what's happening underneath, okay? It was the energy stocks that exploded, all right? Over 7% almost, well, nearly 7%, okay? Escalating tensions in the Middle East with the Strait of Hormuz and the closures. Oil prices, they jumped up by $10 a barrel, okay? Consumer staples held firm, and consumer discretionary stocks got crushed, down almost 3%, or a little over 3%. Inflation came in hot. The CPI for April was about 3.8%. Producer prices jumped up over 6% year over year. So I know that's a lot of stats and percentages, but here's why that's important, okay? Because this past week, Jerome Powell's chair tenure at the Fed is over. Kevin Warsh takes over, and that signals many more things other than just market moves. Okay, so Powell's tenure, 18 years. Okay, he tripled the money supply. Quantitative easing, or QE, you may have heard that term sprinkled around somewhere. That's massive. Okay, while current inflation spikes are not necessarily driven by money supply, they're more so driven by energy disruptions in the Middle East. But income has also widened that gap there of income inequality. Young Americans are losing faith in capitalism, and the Fed's independence has been tangled up with politics in ways that we just haven't seen before. Okay, well, now Kevin Warsh is signaling a different path, quantitative tightening, or QT. Okay, it's a pivot away from the easy money era, and the regime change is not an overnight thing. Okay, but the direction matters. So this should be exactly what your portfolio is built to handle. Fed transitions happen, policy shifts happen, markets rotate. Your portfolio should be built for this. This is why a plan is so necessary. So if you have questions about how these things affect your positioning, reach out to me. My link is in the bio. You can also hit the website, johnsonwealthadvisors.com. Set a time using my Calendly link, and we can discuss how these things impact you. Until then, I'm Elwis Johnson, your financial planner with Johnson Wealth Advisors. See you next week.